This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, November 24th, 2015. Euro dollar. So setbacks have stalled out a bit in recent trade, with the market bouncing into Tuesday, though overall the downside pressure remains firmly intact, and any rally should continue to be very well offered in favor of a fresh downside extension back towards next key critical support in the form of the multi-year low from this year at 104.62. That's going back to March. At this point, look for any rallies to be very well capped into the 108 to 110 area, while ultimately only back above 113 would compromise the immediate bearish outlook in the euro. Sterling dollar. So cable continues to put in a series of lower tops and lower lows off that 2015 high, and the most recent lower top is now projected at 153.36 ahead of a downside extension to be confirmed on a breakback below the recent lows that we saw down at 50.27. A move below 150.27 will open the door for the next major downside extension, exposing the 2015 low at 145.66. At this point, a breakback above that recent high that we saw at 153.36 would compromise the immediate bearish outlook, though only back above 155.10 would really negate the bearish outlook for this market. Dollar yen. So dollar yen has once again been very well capped on rallies up towards the 78.6 Fib retracement off of that 2015 multi-year high to August low. That comes in around the 123.75 area, and the market could be poised for deeper setbacks if we see a breakdown below 122.20 on Tuesday. At this point, a break below 122.20 would open the door for a more significant decline to the downside, while only back above that 123.75 area would compromise and open the door for a bullish resumption back towards that 2015 multi-year high at 125.85. Euro Swiss. So Euro Swiss continues to trade within a consolidation over the past several weeks and over the past few months, though the market continues to hold within a recovery structure off that low that we saw earlier this year. At this point, setbacks continue to be very well supported ahead of 107.14, with a higher low sought out in favor of the next upside extension through 110.50, those recent highs that we saw going back to September, and towards 112 further up. Aussie dollar. So Aussie has been comfortable consolidating over the past several days, though the market remains confined to a broader downtrend, with any rally seen well capped below recent highs at 73.82 in favor of the next downside extension back towards and eventually below those recent multi-year lows at 69.08. At this point again, only back above 73.82 would compromise the immediate bearish outlook. Dollar CAD. So dollar CAD continues to be highly constructive, with this market now focused on a retest of the recent 11-year peak at 34.57, which could open the door for a move towards a push towards the 140 area further up. At this point, setbacks should be very well supported into 130, with only a breakback below 128 to compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi now remains pressured to the downside after the market stalled out several days back ahead of 70 in the 69 area, and a medium-term lower top is sought out there ahead of the next downside extension towards and back below those recent multi-year lows that we saw back in August around the 62 area. SPX 500. So the S&P 500 has been consolidating off recent highs that we saw at 21.17 after the market had stalled out in early November, just shy of that 21.37 record high from May. At this point, a breakback above 21.17 would open the door for a retest of that 21.37 record high, while inability to do so followed by a breakback below 20.03 would negate the possibility for recovery and suggest that the market is in the process of carving out a more significant medium-term top ahead of more weakness down towards next key support on a medium-term basis at 1870. Gold. So gold continues to trade off multi-year lows that we'd seen in the previous week, and if the market establishes below 1065, this could open the door for an acceleration down towards major psychological barriers at 1000. At this point, the market would need to see a breakback above 1100 for the pressure to be taken off the downside and to open a more significant correction. Daily studies are oversold, so we could soon see a bounce, but again, a breakback above 1100 would be required to trigger such a bounce.